Let's welcome in our next guest, Samir Arora, Fund Manager at Helios Capital. Samir, good morning. Thank you so much for joining us this morning. Just wanted to understand, as far as markets are concerned, everybody is saying from budget lows, Nifty has done very well. We are up 20%. From Brexit lows, we are up about 8-9%. But if you look at last December to now, at least in dollar terms, we are absolutely flat. Would that be the correct way to look at it?
I think that's the only way to look at it. Because it's not that the investors, I can at the end of the year say that we have made money from Feb end or from March end. We have to say what we did for the year, calendar year, fiscal year, whatever year you may have. So all in all, it has done very well even then relative to others. And that is reassuring and generally attracts attention, which is what we want. I mean, good attention, not bad attention. But the fact that people have made a lot of money, nobody has really made money.
Right. If you look at the result season that we are coming into for Q1, or probably, this entire year, it was expected to be a soft year in terms of earnings. So market valuation, one would say, is not looking very, very expensive when you consider FY18 would be a, better growth rate in terms of EPS.
No, I think 17 also we don't think will be bad. I think even in 17 the earnings growth would be 15-16%. Also, sometimes these earnings at a market or a index level get overly hit by a few stocks, say Tata Motors or Tata Steel and things like that, who have very massive swings in their year-on-year profits. But if you leave out a few obvious good or bad influencers of the overall number, the rest of it will have 15-16% earnings growth.
Right, and which is a good number, which still makes you believe that upside is possible from here on?
No, upside, I don't look at it like that on a day-to-day or a week-to-week basis. Generally, we feel that India is in a good position relatively. And in absolute also, if the world stabilizes, which clearly seems to have currently, India is doing well because we have had 2-3 years where there have been no earnings. Secondly, we've had specific problems, and now we have a few reforms that was related to, say, agriculture and monsoon and all that. And we now have some reforms in the anvil, which is related to, say, GST. But more than that, also all the effort that the government has put in the last 2 years, maybe at some stage it converts into, business on the ground for companies. So that's why everybody's okay. It's not literally just this year's earnings which is the driver, but that such high numbers, because 15-16 is a good number, that you can expect for the next few years. That is right. What the
Right. Two big events have happened in the last, say, 45 days. One is, of course, the RBI governor, the change over there. And second would be Brexit, which was, of course, a global event. But apart from that, we've got monsoon, which has come in, which has been, of course, in line with estimates. And after 2 years, we are seeing good monsoon. And second, reforms from government, hopes of GST has again increased. You think one should look at those positives rather than these global factors, which may just lead to short-term outflows?
No, these are all neutralizers. As in, if there had been no Brexit, if there had been no Rexit, the market could have been even higher for all we know. We don't know. But in general, these have neutralized. I think GST is actually after one month, or maybe even after a week or two of GST's passage, we will say that GST is too long term. But for the moment, we need that event.
As far as GST is concerned, you're saying long-term as in implementation would take time and earnings growth because of GST would take time to come in?
So therefore, as soon as the event is over, let us say, suppose on 22nd or some July it happens, by 15th of August, if you come and say that GST is a positive, we will say, sorry, that is too far away. That is unfortunately how this world works. That we all are very excited about the event. We will celebrate the event with a rally. But after that, we will not be allowed to say GST again and again, because initially it will have many issues in terms of implementation and who will benefit and who will lose and how will it be done and when will it be done. And that will be a big picture macro positive, but you won't be able to rely on it in terms of justifying things after, say, maybe August 15, let's say. So that 15 days, 20 days of seeing it through.
Samir Arora, I was reading a few of your interviews that you've given, and in one you said that you're quite a frustrated man and you've heard everything and now you've grown up and you don't really want to follow these everyday moves. Unfortunately, we are in that business of telling people to follow the everyday moves.
My thing was that everything, if you say what will happen to the market today, and if it doesn't happen in the same direction, therefore the market or the world should ignore it. This was a philosophical interview and we will let it pass.
So let me try and get a sense from you that, if you look at the markets today and you see a stock go up and an investor sees a stock go up, someone's sitting at home and then they go to analyze what that stock is doing. Now, nobody wants to buy because they've burnt their fingers in the past. And by the time they've actually analyzed and learnt about it, that stock has moved up 20, 25%, 30% and become too expensive again for them to get into. And everything that you open up the pink papers seems to be in businesses where actually it's only private equity, venture capital, angel investors who manage to get into those businesses. Now, where are pockets of listed companies where one can actually invest and make money?
Well, it has been very, very obvious for the last 20 years that private sector banks will make money. And every time the result comes, which by the way are top 2-3 names are all private sector banks, but one of them I've had for 20 years, the others for at least 7-8 years. We don't look at the results. Every time you see on the result day that today, if you own this and the result is out, wait for 10 rupee correction, and then you know what they will say after that. They will again say that for the next 2 to 3 years, we will grow 25%. We also know from a big picture sense why that is possible. Because they are taking market share from government. We know that the government companies don't have enough equity to be able to sustain their own growth rate. We know that they have NPA problems. You still want to analyze and say where are the pockets. The question is that people say give us a new name. Because this name we have heard although we don't own. And we are proud to be able to tell the world that we own this stock which everybody knows and we still own it and we will still make more than 95% of the public.
It started when it was very cheap. You got that idea early.
No, but that is different because the point is every day new investors come into a fund or every month. And so in a sense they have to buy at today's NAV. So they are buying at today's valuation. Plus when we get new money in the fund, we are replicating maybe say 95% of what we have and maybe a little bit you will change one stock here or there. So it's not that just because we bought it 20 years ago, if we only hold that quantity, it's just that we started at that. Obviously, based on the size of the fund, we could have bought these stocks even last month, some of them, or even sometimes sell. But that is not a view-based selling, but a flow-based buying or selling to the fund. But the point is, in India, the way the money has been made has been very, very obvious. The problem with new fund managers and with new investors is that they want new names. And I have matured to say that I have no ego to say that the old names continue. Don't run around just to prove a point to, investors.
All right. When I had last spoken to you, and that was right after the victory of Narendra Modi, and you were quite positive that there would be a return of the capex cycle and stuff like that within 4 months. And I'm not talking stocks right now. I'm just trying to think of what's happening in the overall business environment. 2 years down the line, yesterday we spoke to A.M. Nayak and he believes that private capex is still going to take some time. What went wrong? What happened because of which, and this is not really just the government, but what went wrong overall in the global environment, in the domestic environment?
There are two things. One is analysis and one is investing. So from an investing point of view, nothing has changed in the last 2 years. We can discuss GST, not GST. If you ask me what have I done in response to GST, nothing. I haven't bought a stock which I believe is directly connected to GST. In the same way, whether there is reforms in state-owned companies or not, whether there is private sector management brought into PSUs, what have I done other than talk about it? Nothing. The stocks that have done well have been the same old stocks which are positioned well in India relative to India's opportunities and things like that. But what has gone wrong is not wrong, but the fact that the private sector, even if the government gives them approval, because that is all the government can do. Okay, we will give you faster environmental approval and we will give you maybe some land approval or whatever, or we will give you a linkage or a fuel linkage. But that private sector guy does not have the trust of the market and obviously doesn't believe in himself. So there, nobody is going to fund even his equity. So now approval is not the issue. Having money and ability to invest is the issue, and therefore that will be done and is being done first by foreign investors who have the money. You think if one of our older infra guys gets all his clearances from the government, can he still go and raise a QIP or any new money? No, because his previous track record has been demolished because of he got stuck in projects, whether it was his own doing or not, nobody cares right now.
So now the point is that obviously there are two parts to it, as you said, that finding funding is difficult right now because of your past record, and also because, as we've seen, PSU banks, we all know what has happened there. So I'm not going to go into that. There is also an issue of demand. Now, one of the things you said that what can the government do? One of the things that governments have done historically is to spend, to generate demand, to give that demand impetus. It's obviously post-80s that became a bad word. But is there a case for governments to do that in India?
Well, the government is doing that indirectly through demand in terms of investing on roads and infra and all that, and secondly maybe this pay commission. But if you're meaning that they should spend beyond their means, we have already seen what that did to our currency in 2013. Because right now another problem is that when we spend money to give to people, they are mostly buying imported goods because they will buy mostly mobile phones and TVs and things like that, which are 100% imported. So it is not very clear that if you just give money, in what form will you give for consumption? You can give it for infra spending, which also is some demand and at some other level. Is that how would you do it, which would...
If I look at infrastructure demand, I mean, let's take it into two parts. One is obviously again, I'm not specifically asking what is going to happen because of the pay commission. It's actually not going to do much if one calculates the average amount of money that they're going to get. But let's say it's something like capital expenditure. Now, if we look at the latest report of CMI, we're seeing that in Q1 in FY17, new projects started, projects which have been completed, and projects stalled. Projects stalled highest since 2013 first quarter, which was the worst UPA year. Projects started lowest. Projects completed lowest in 10 years. Now, is there a case to actually bite the bullet, increase the fiscal deficit, and do capital expenditure?
Well, the thing is that what I read a report saying why a new government, of course they justify when these things happen, but why a new government takes 2 years to actually even spend, even if they are willing to spend on day one, is because of the way this report has to go to the ministry, and then the ministry has to ask for tenders, and then the people have to be given 5-6 months to whatever number of months to respond, and then there's a committee to choose. So in his model, which is a big infrastructure consulting company in India, the time to see whether this spending has gone up or not is more or less now, because of just the way the process works. And then you cannot come on day one. For example, people come and say, let's do Wi-Fi. Now you cannot come on day one and say, okay, Wi-Fi and Khan market first, because that's the way this system of ours works. Today we would not believe that spending without thinking, which was the old way, is the solution. So I would say if the demand is less, so be it. Obviously, we have seen that the government is very keen on having lower interest rates and having, indirect boost to this sector, which may happen now with the new governor. But I don't think that will materially change anything. It's okay if things take time. It's part of life.
Yeah, because I mean, I come back to that same point. If I start a company and you give me loans at 2%, but I'll have to return even that 2%, and there are no buyers for what I make, why would I even take that loan at any interest rate? I mean, only time I would take it is if you give it to me at 0. And then obviously it's free
No.
for me. Yeah.
The only reason you would take it is if you don't have to return it.
Yeah, exactly.
That is another one. Right now, you will not even get matching equity. I don't think lower interest rates will change anything because India also at a conceptual philosophical level is more a country of savers than borrowers.
All right, Samir Arora, while you speak, and I'm just interrupting you there, so I'm going to ask you to answer that question again entirely because let me tell you, we're going to repeat. We've got you after a long time, so we're going to repeat that interview, and I want to ask that question. But while you speak, Quest Corp has listed 480 rupees. That's a 51% premium to what it was issued at. So 51%, which means that its implied market cap goes up to 6,000 crore from the 4,000 crores which we were saying. And that also means that expected FY17 earnings, its price to earnings ratio right now is 45 rupees. Now it's up to you to buy it at 485 or not. So I'm going to go back to Samir Arora, but so that we can repeat this in a clean manner, Samir, please answer that question again from the beginning, the one that I asked you about, that what difference does it make even if low interest rates exist and I don't really have a business?
I think in India, I'm not but very clear that lower interest rates help because India is as much a country of savers as borrowers. And when you have lower interest rates, you hurt the people who are trying to save, the old, the retired. Also note that 98% of the public does not really invest even in the market. So they don't benefit directly from lower rates boosting stock market and therefore a positive wealth effect. So I think at a country level, it is not very clear to me that lower rates help the country per se. But of course, and even at an individual company's infrastructure setting or whatever they want to do or whatever they want to borrow for, half or 75 basis point lower interest won't change their life. The people who you see shouting about lower rates are only the guys who are borrowing for houses, and they are the middle class and they are the most vocal. And they are the ones who on social media believe that they will benefit a lot. I don't think anybody else superly benefits. Maybe they'll benefit a little bit here and there.
Right. Samir, let's talk about the recent rally as well. One thing which has been different in the recent rally has been, names like under-owned names have done very well. So PSU has done well. Real estate has done well, which people had just forgotten in the last 5-6 years. What do you make of this change as far as, this fund flow activity is concerned?
We don't care for these sectors. So we believe that the reason is that people who come late to the market want to believe that they are at least buying something which the other guy has not made money on. That is their own starting point because they feel bad to buy a stock if I have made too much money on it and they have to effectively buy it from me in a philosophical sense. So they will buy these same old stocks and they will again not make too much money.
Right, so it's more of a left out feeling and these names are looking as if they have not run up versus the market. That's why you're seeing some buy.
Left out feeling guys buy stocks that are beaten up without really knowing why it has changed, but because it hasn't gone up, they think there is always a catch-up trade. And there is a catch-up trade up to a point maybe, but these are difficult to time and again it looks good that from the bottom they've gone up so much, except that at the bottom, even if some, and also one more thing, when you buy these stocks, you don't really buy them with great conviction, and therefore you may do a little bit of buying. Suppose as a fund, I buy 1% in 1 million or 0.5% just to feel that I have bought something cheap. It doesn't change my life for it. I don't have starting conviction to buy that.
Right. Just wanted to understand about the metal space. That's a space where we have seen some change. So there, for at least the large cap ones, there has been, I know you cannot talk about stocks, but something like a Tata Steel has a very big history. Hindalco has a very big history. Some of these names which really generate free cash flows could do very well. There has been some change over there.
We don't buy metal stocks in general and haven't for the last 22 years. And we will not buy these or any other names more or less ever.
Right. Recent rally in the consumer pack.
Let me explain why. Because this is important. My logic is that the metal stocks and many global commodity stocks, depend on first price as the biggest influencer on the performance of the stock, the price of the commodity. And the price of the commodity does not, you have no view on it. I mean, view means, sorry, you have no way of, projecting it really. And it depends on global factors, and it depends on how Australia is growing and how China is growing and how Brazil is negotiating with Japan. And these things are well beyond any normal investor tools. And therefore, he's just guessing on some big picture, which he can guess, maybe based on stock price being down and therefore be up. But beyond that, there is no conviction in how to derive that. Other things are more business related. This is more price related, which is very difficult to estimate.
So, Samir, would you say that the best bet for an average investor watching out there who has been burnt in the past is to look at the top blue chip companies, invest in them, not try to bother too much about research and trying to work out valuations and stuff, invest in them and hold on to them because they will continue to get good returns?
Well, he has to have a little bit of a view on, for example, many of the large companies haven't moved for 5-7 years, and it's been pretty obvious to any regular fund manager, and they're all underweight these companies. But other than that, if you broadly know that, the 4 or 5 sectors where there is clear growth in India is financial, the leverage is low, interest rates will be lower, and there is a private versus public this thing. The other one in general is consumer, a little bit of pharma, IT. Where I feel hesitant to say is where the stocks are driven by global factors like commodities, where stocks are driven by companies which are in non-transparent sectors like real estate, where there is clear government emphasis against black money, and every Indian knows. Which Indian does not know that Indian real estate prices are high, not because we have good real estate, but because we have too much black money? If these things they can't connect, maybe they should just buy somebody's fund.
And the problem is that if they have black money themselves, these investors, difficult to invest in the stock market. They should go and buy real estate. All right, but since it's very difficult for the average investor, forget about an average investor, even for TV commentators like us, to really track the global scenario. It's confusing, right? When you think of Brexit and people say that, oh, this is going to be a doomsday scenario. And you wonder why, because it's the same number of people eating the same amount of food, buying the same number of goods. And you wonder why this will completely destroy it.
Not correct.
All right, correctly.
Not correct. Because if that was the case, then first of all, the markets are much more volatile than the underlying economies. If you say that the stock market or stock price is a present value of all future dividends, a lot of research has been done that the stock market is much more volatile than the underlying dividends. So this market, please don't take it as, nothing has changed from different day. Actually, nothing changed from yesterday, today, but the market is up, whatever it is up. So in that case, Brexit actually is a pretty serious issue if it threatens the future of Europe, as in some other country finding that UK has had a good deal while exiting gets encouraged. There are politicians everywhere who will play on these concerns and fears and say that UK has gone separate and hasn't done too badly. So these things are important in the financial market. You will still eat the same bread, but we will give a different P to that bread next day, more bread quicker.
But another concern that people have is that does this indicate a broader change? Brexit, the rise of Trump on the one side, Bernie Sanders on the other side. Does it indicate a broader change across the world? Does it indicate that we have to now prepare for the way in which capitalism is going to move? That's going to be different.
Absolutely. That's why I think that is a serious issue. And Donald Trump's rise is the same in India. Kejriwal's rise is the same. There are all these guys who are appealing to the public, which feels that they were not part of the, the class which benefited in previous years, and also concerns in the case of Europe and US about immigration and things like that. Obviously, these are big concerns. Now, the question, that's why I kept saying that if you say that today market is up after Brexit day, therefore Brexit is good. That was the question on which you were quoting you in the interview. That everything does not have to be told or interpreted from the next day's stock price, because the next day's stock price we have seen does not really know half the time And my example was that after Lehman Brothers went under on, I think, 13th of September, that Friday, this happened on a Monday, that Friday and even the following Friday, the market was higher than the Friday before this news broke out. And therefore, for 2 weeks at least, the US could not figure.
Okay, so let me take that question a little forward, and I want to ask you this question: that for, let's say, now almost 30 years, we have seen the operation of global finance, right? And the way in which central banks have operated, they've also helped global finance move from one place to another, maintained whether you take inflation targeting, whatever you look at. My question is that if there are major political changes across Europe, across the US, across the world, will we see a decline of the power of global finance? And that is an important question I'm asking you.
Already happening. In fact, many young kids of my classmates come to me for career advice, and I have said that I'm sorry, but I was in the last batch of people who enjoyed the growth of financial markets and employees who were in financial markets. It was a very, very easy recommendation in the last 10-15 years that if you're graduating, go into no other business than finance, because it'll just pay you 2-3 times or more than any other business or any other job that you will have. I think that is gone. Jobs in finance are gone. Private banking gone. Equity markets gone. Asset management gone because of ETFs and things like that. If you look at just pure individuals, the relative benefit of working in the finance industry, I think, is more or less gone.
So, but you still believe that the capital market...
We have enjoyed, because we were there right in the prime of that financial market, people doing better than non-financial market, the reality of just being in the right sector at the right time for so many years.
It's a bit like Peter Lynch, who has not said a word since the 2008 collapse, right? About valuations and investing. But you still believe that capital markets will give you a better return than just putting your money in the bank?
Well, in the Indian bank, we don't know, but in the world, the bank right now is negative. At least when you buy stocks, you believe that you will make some money. Even dividend yield in US is more than their 5 and 10-year bonds. So, yes, and for that I believe, because first of all, I have grown in this environment where equity has done so well for me and for my investors that I can't forget that. But when a new kid comes to me saying, where should he go? Now, finance is not so obvious.
All right. On that very optimistic note, Samir Arora, thank you so much for joining us. Pleasure talking to you as usual.